Welcome to the Lend Academy podcast, session number 25. This is your host, Peter Renton, founder of Lend Academy. We have two great guests for you on the podcast today. We have Jared Hecht, who is the CEO and co-founder of Fundera, and we also have Brayden McCarthy, who is the head of strategy and policy at Fundera. Both super sharp guys. I was really happy to get them on the show. Jared is kind of famous for his previous company, GroupMe, that was acquired by Skype for $80 million, 370 days after it launched. So that was a very quick success for him. And he's back with his next startup now, which is Fundera. And Brayden McCarthy, who has a very different background, but just as interesting, he came from the White House to Fundera. He was a policy advisor working in the Small Business Administration. So he brings a different perspective. Together, I got the guys on the show. We're going to talk a lot about small business lending today. And you're really going to find out the problems and the solutions to the problems that we've all heard about. Hope you enjoy the show. Welcome to the podcast, guys.
Thanks for having us.
Okay, so before we get going, I really would like to get some background from both you guys, just to give the listeners a little bit more information about you. Why don't you go first, Jared?
Great. I'm Jared Hecht. I'm the co-founder and CEO of Fundera. Before Fundera, I started a group messaging company called GroupMe. And my career has largely been in the consumer web and not financial services. So this is a rather new endeavor for me. And before GroupMe, I was one of the early employees at a consumer web startup called Tumblr here in New York, and joined when there were around 6 people working there, spent around a little over a year there before leaving to start GroupMe, and GroupMe ultimately became part of Skype and Microsoft, and spent some time there as well before leaving to start Fundera in September of 2013.
Okay, great. And what about you, Brayden? What's your background?
Sure. So I'm the head of strategy and policy at Fundera. I spent most of the past few years before Fundera working in DC in the Obama administration. I first worked at the Small Business Administration for the administrator, Karen Mills, on a range of capital access issues, as well as a broader portfolio focused on how to help small business owners recover from the financial crisis. I then moved over to work at the National Economic Council in the White House for the president's chief economic advisor on small business issues as well. And then I also authored with Karen a paper out of Harvard Business School, which tried to assess the state of small business lending and specifically looked at online small business lending.
Okay, so what was your drive to sort of study small business lending? What was behind that?
Sure. Well, I think for me personally, I'll let Jared chime in here as well. It's a very intensely personal endeavor. I come from 6 generations of small business owners. I grew up spending every summer of my life as a kid working at my parents' small business, which I think is a kind of typical Main Street type small business. Mm-hmm. And I think, coming into the recession, and seeing just how hard the recession hit small business owners. This being a financial crisis, which tends to hit small business owners much harder because small businesses tend to be more reliant upon banks for their capital. You really saw the impact that it had on small business owners, which is what drives job creation in this country, as we all know. And so I really wanted to help out, which is part of what drove me to move to DC and was one of the main impetuses for me to come work at Fundera.
Okay, that's interesting. So yeah, I grew up in a small business family as well, and I started working when I was 6 in my father's business. So it was, I know what that's all about. So Jared, what about you? I mean, you go from something that's, you go like really, as you said, it was, consumer internet space. This is a really different space. How did you make that leap, and what was the driving force behind it?
So I'd say there are 2 things, one of which was more of a personal challenge for me. GroupMe was a very fun product to build and a fun brand to build, but we never had a real opportunity to turn it into a real business or a big company. So I knew that whatever I wanted to do next, I wanted to make sure that I was approaching it through the lens of, can this actually be a real business? Meaning, does it have a true business model, and will it have an opportunity to grow and become a real company? And the idea for Fundera really came up rather serendipitously I was trying to make an investment in my cousin's small business. He has a chain of sushi restaurants in Ohio. At that point, this was around 2.5, 3 years ago now. He had 2 restaurants, and I wanted to make an equity investment to help him open up his 3rd restaurant. And he denied me that opportunity because he didn't want to be diluted.
Right, fair enough.
And yes, and instead he asked for a loan. And I was very confused because he had 2 restaurants open at the time. Both were very profitable, doing several $100,000 in EBITDA apiece. And I said, why don't you go to a bank and get a loan? Why are you asking me for a loan? At which point he explained to me that he had been to several banks and denied by each bank, mainly because his time in business. He hadn't been around for longer than 5 years. The banks generally viewed restaurants as a rather risky industry. And that seemed inherently wrong to me, particularly coming from the world of consumer web startups, where many companies that generate no revenue are able to raise millions of dollars in the equity markets. And something seemed inherently backwards with the market. So I began to do a bunch of research for several months, probably around actually 12 months or so, investigating the world of alternative lending and seeing what the options were outside of banks, and ultimately stumbled upon the idea that became Fundera.
Okay, so then let's expand on that. Can you explain exactly what Fundera does and what's your mission?
Yeah. So Fundera is a very simple product. It's an online marketplace for small business loans. And we have a particular focus on connecting small business owners with non-bank alternative lenders. It's mainly because we're very bullish on non-bank alternative lending. We think that alternative lenders will be the primary source of capital to small businesses over the course of the next decade. And we generally qualify that statement by saying these are small businesses that do $7 million in annual revenue or less, because once you reach that threshold, banks begin to compete for your business, in which case you should most likely work with a bank because you'll most likely get the best terms and rates at a bank. We also qualify that by saying these are generally loan sizes that are $250,000 or less. And we think that that will move up to around $500,000 or less over the course of the next several years. But we like to talk about alternative lending and the alternative lending credit market within those boundaries. And our mission is to really grow the market for small business credit. And we would like to play a significant role in helping catalyze the growth of that market.
Right. And that's the thing. I mean, it's no news to anybody. There's been many, many articles written about, small business credit and the lack of access that small businesses have these days. And Brayden, I want to go and talk about that white paper, although it's not really a white paper. It's a research report you did with Karen Mills, who was the former head of the SBA. And in that paper, you talked about the state of small business lending and the sorry state that it's in. And then you basically said, you came with the premise that, new technology, new underwriting algorithms can really change the lending landscapes. And can you sort of give us a little bit of background about that, your research there and how you think that new companies can really help?
Sure. Well, I'll take the first part first. And that is, as you mentioned, to realize that the problem in small business lending is quite significant. So to put some numbers on what Jared was referencing, 80% of small business owners who apply for a loan today get rejected. And that is a staggering number. And it's easy. It certainly was easy when I was in DC, given the time we were in, a recession, a financial crisis in particular, to think that number is more related to the cyclical as opposed to the secular. And there's a lot to be said there. Small business loans are down about 20% since the pre-recession peak. And that is in part because during banking crises, during financial crises like we're coming out of right now, banks turn off the spigot of lending by definition. So you've seen terms tightening during the crisis, and they haven't loosened as much for small business owners as they have for large businesses. But that's not really the whole story, because the truth is the easiest way to describe this kind of shift, the secular shift in bank lending to small businesses, is to realize that banks have become a lot more Fed-focused than community-focused. Part of the issue there is that there's been a lot of banking consolidation over the past 2 decades. But when you look at the numbers, small business loans have fallen from about half of total loans made to under 30% of total bank loans made today. And that is the real issue. The fact that there is a secular trend to banks to not lend to small businesses. And when you look at kind of the industries that have been disintermediated in some way by technology, really financial services and banking in particular is one of the last vestiges of kind of how things were always done. So I think it was 20 years ago that Bill Gates mentioned that the retail banks are dinosaurs. But the reality is, for most of the past few decades, how you would go to apply for a loan is not all that different than how you would have in the middle of the 20th century. So I think that was the fundamental point behind the paper. What you were seeing emerging with online lending is a fundamental kind of shift, which we think over the next 10 years will be the primary source of small business lending to small business owners. And so you really even just see it on the first point, on credit access. So if you look at it, small business lending over the past 20 years was largely split between the haves and the have-nots. Jared mentioned business owners that have more than $7 million in revenue, largely bankable. Businesses that had less than that generally were not getting loans from banks. A bank might push them into a credit card, but they weren't going to get a term loan. And what you've seen with the emergence of online business lending is that you've opened up brand new channels of capital for those business owners to access. And the reality is that's the vast majority of small business owners in America today. So that's the first point. You've seen a much stronger access to capital, new channel capital from online lending. The other piece is greater convenience and ease. So applying for a small business loan is often needlessly time consuming. One of my favorite studies is one done from the Federal Reserve, which talks about how the average small business owner that got credit had to go to 4 to 5 different banks and spent about 2 to 3 full days of man hours searching for that loan, filling out paperwork at bank to bank to bank. And what you have seen with a lot of online lending is, one, the process is a lot quicker, it's a lot simpler, and it's a lot easier for them to walk through. The other piece I would just say is you were seeing the kind of emerging choice architecture in online lending, where before the process for applying for a loan was you'd go to 1 bank or 2 banks and 3 banks, and it would be time consuming because you'd have to go to each bank individually. But now with sites like Fundera, you can access a range of different lenders, all kind of through one marketplace, through one site.
Right. So what you were saying then is that, small business lending, it's never going back to the way it was pre-2008, where small businesses were able to receive credit at least more so than they are today. You're saying that really this is a permanent change in the landscape.
I think it is. I think that when we're talking about small business lending, it's important to kind of break out the channels. And bank lending is what I'm referring to in particular. I do not think that is we may see a cyclical kind of bounce back, but we're not going to see the numbers we saw before in terms of the overall percentage of small business loans that are made relative to total bank portfolios. That number of half of all loans that were made 2 decades ago going to small business is not going to come back. And I think that's in part due to higher transaction costs of small business lending. That's in part due to regulation. That is kind of the name of the game in banking today, where you have to hold much higher kind of capital levels against a business loan than you do against a consumer loan, because it is a riskier loan product. And it's also a lot harder to predict creditworthiness, or at least it has traditionally been a lot harder to predict creditworthiness in small business lending for a lot of banks. And so I think that to a certain extent, there is a view within banking that we can't do it profitably. We can't do it profitably at the rates that we can charge.
Right.
Therefore, we're just not going to do it. What we will do is push business owners into credit card products. And that's all fine and good for some business owners, but for many who need project-based financing, it doesn't work at all.
Right. So then let's talk about these small business owners. And I've owned several small businesses in my life, and what the trouble I see it, and obviously this is an opportunity for you guys. I'd like to get your perspective. They don't think about going online. They might, they have a bank. So the first thing they do, everyone has a checking account. So you go to the bank where you have your checking account and you say you want a loan. That's the first thing that small business owners typically do. And tell me, you can dispute that if you feel strongly about it, but that's been my perspective of the people I talk to. What's it going to take for these people to go online? And it feels like it's like we have the peer-to-peer lending challenge for all of us, is that it's just lack of awareness, is that, Ron Suber talks about it all the time. We need more awareness of this product. So how are you sort of addressing that issue?
So I'd say that the short answer to what it's going to take for people to go online first is time. I think it's inevitable that it will happen. It's happened across virtually every other industry on the web. But how we get there is a different question. And I think there's things that we can do to actually accelerate that process. And there's some core fundamental problems that exist. Number one being that, sure, most small businesses do go to their bank as their first stop. And I don't necessarily think that's a bad thing, because right now, when you compare alternative lending products to bank products in terms of the cost definitely seem to be superior. And I think over time, that will change. As the market becomes more and more competitive, prices will come down, and the products offered online will be equally appealing, whether it's on a cost basis or a time basis, because they're just so incredibly easy to use and so incredibly easy to actually apply for a loan online using an online lender versus a bank lender. I think the things that we can actually do to accelerate the process are oriented around basic education, producing a lot of content and getting the word out there that there are options outside of a bank and beyond the bank. And they're actually very viable options and fair options. And there are also different types of products out there that exist that can service different types of small business owners. A large part of what we do is oriented around producing this type of content, oriented around lending literacy. Incredible how many small business owners do not know what types of products are actually out there, or which ones may be best for his or her business. And we really view that as a primary function of Fundera, is that educational component to inform small business owners that there actually are viable options beyond the bank. This is what the ecosystem looks like. And here's what you're best positioned for in terms of your small business eligibility.
Mm-hmm. Okay, so then let's just talk about the process that you have there. So you go onto Fundera's site, and you fill out some information, and you're presented with some options. How much are you holding the customer's hand here? Are you then just sort of I see some of the people, you've got On Deck and Can Capital, Funding Circle, and others as options. Do you then say just hand it off to On Deck or Funding Circle and you're done? I mean, what data do you gather to make that decision, and what data do you share then with the platforms?
All of it. So there is a lot of hand-holding that is encompassed in our product. And the way it works is a small business owner completes our application. We then present all of their lender matches, and we categorize lenders by the different products that they actually service. We give the small business owner information on every single lender and every single product in terms of the way the product actually operates, so that they can make an independent decision on, hey, this actually is the best product for my business because it solves my immediate needs or my midterm needs, and this is the price that I'm willing to pay, and I'm going to move forward. At that point, a small business owner will select one or more lenders or one or more products that they want to move forward with and actually submit an application to and receive an offer from. We then collect all the remaining information that's needed to submit a fully completed application directly into the underwriting departments that the small business owner has selected. So we're actually packaging up the entire customer application and submitting it on behalf of the customer. So in terms of a handoff, there virtually is no help. The entire experience takes place on Fundera end to end up until the final funding event. Okay.
So you're not sort of handing the customer to the Funding Circle and saying, right, you go with it. You're really controlling the whole process end to end.
We are.
Okay. So a Funding Circle comes back and says, I need tax returns, I need balance sheets or what have you. That's all going through.
Generally they won't even say that, because we know exactly what every single in our network needs in order to process an application and get an offer.
Gotcha. So you're minimizing the back and forth then.
That's absolutely right. I mean, Brayden, alluded to the amount of time that's required to submit an application and package an application to a bank. If you're going door to door and you're packaging up unique applications for alternative lenders, it can still take a lot of time, because every single lender has their own unique criteria, their own unique data that they need to underwrite a loan, their own unique set of documents that they actually need to confirm the eligibility of a small business. We offer a service where you can do that all in one place, because we have that aggregate set of data and requirement.
Okay. That sounds fair enough. So then, like the thing that I was thinking of, I see these lenders on your website. They're not front and center as far as the customer goes. Because I think, okay, so you get a loan through Fundera, but it's really a Funding Circle loan or an On Deck loan. That's kind of downplayed by you guys, I take it. So you're managing the relationship. So when they want to come back for a second loan 2 years later, then they're not going to go to On Deck. They're going to go to Fundera. That's your thinking, I take it.
So that's entirely up to the customer, to be totally honest. And the customer's well aware who they're getting a loan from. They are explicitly selecting which lenders they want to move forward with. So if they would like to go back directly to the lender that they received their first loan from and renew, they are absolutely more than welcome to do that. Or if they want to come back to Fundera, they are as well. But we also think about building other tools that engage customers over the long haul beyond the initial transaction. And we do quarterly check-ins with our customers as well to see how they're doing. How have they actually deployed the use of funds? How is their business progressing? We like to have a long-term relationship with these customers. And I think that's one of the challenges in the lending industry, is that lending is very transactional. Whether you're a consumer or a small business owner, you walk in the door, you apply for your loan. If you don't get it, you go to the next store. You keep that process going. Or if you do get it, you take your money and you repay it back. And sometimes you may come back and sometimes you may not. But there are very few touch points in terms of ongoing customer engagement and retention outside of the renewal. So right now we're really trying to think about what are the other tools that we can build that complement the loan products that they're actually receiving and can help us stay continuously engaged with our customers.
Right. Fair enough. So then how are you guys making money? Are you being paid part of the origination? Is there a referral fee, interest rate spread? I mean, how are you making money?
So it's an entirely success-based business model, and it's an entirely free service to the small business owner. Every time a loan is funded, the funding lender will pay us an origination fee that's generally equal to somewhere between 1.5% to 3% of the total loan size.
Mm-hmm. Okay, fair enough. So, Brayden, I want to go back to you for a minute here and just talk about, you published an article on Forbes last month about these loan brokers and the fact that there's a lot of shady kind of business practices happening in the business loan industry. So, can you just explain what these shady practices are and what you guys at Fundera are trying to do about it?
Sure. Well, I think we should start with just the recognition, as we mentioned earlier, that the process of applying for a business loan is often incredibly complex for a lot of business owners. So we talked about the number of days it takes going from bank to bank in the typical kind of small business loan process. But even in the online sector, if you were to just Google small business loan right now, you'll see advertisements from lenders that'll pretty much say the exact same thing. The fastest underwriting time, most competitive interest rates, best customer service. And that is incredibly confusing to the business owner. And so there is absolutely a role for brokers to play in checking with lenders, sorting through this process, and matching business owners with what may be the best option for them.
Okay.
Shopping absolutely has a role to play. And the reality is there are a lot of good brokers that offer that sage counsel, that match business owners with loans that make the most sense for them. And they deserve the fees they take. All we were kind of focusing on in the piece is that in terms of best practice for the industry, small business lending generally, but specifically in the broker space, transparency of price and transparency of terms to the borrower should be front and center. So we mentioned not all brokers are bad, but there are a lot of brokers in the offline space that push business owners into loans where the rate is higher to that business owner than what they could otherwise get with the same broker. And the reason why that broker is pushing that business owner into a higher rate loan is because they get a bigger fee from the lender in question. And the reality is the business owner has no idea that's going on. So if you're trading on the assumption you're looking out for the business owner, that you're an impartial advocate, just simply connecting a business owner with what is the best loan option for them, then you can also push that business owner into a loan product that may be more expensive to them just because you make more money off of it. So what we're fundamentally saying is that there needs to be transparency of price and transparency of terms to the business owner, and that broker should be providing that.
Right, and that I remember that was actually discussed in detail at the lender conference in one of the sessions. That because it is criminal. Really, I think it should be criminal anyway. That the situation describes putting a business owner in a product that isn't as suitable to them simply because of a higher commission for the broker. It's really I firmly believe that, you've got to have a win-win for every transaction to make it a sustainable business. But, obviously different businesses value things differently. And that's where we had Noah Breslow on the podcast here a while back. And he was saying some business owners really value total interest paid. Some are looking at they want the lowest interest rate. And so what are your thoughts on creating transparency based on the different there's different needs for the borrower?
Well, I mean, the first thing I would just say is that we should have it. We should have transparency of all of it. So right now, a broker is not required to disclose kind of other rates that a borrower could get with other loan products that broker may have. So oftentimes what happens is the broker will go back and quote one rate, one loan product, and pitch that product as a one-size-fits-all option for the borrower. And the borrower really is none the wiser in terms of what rate they should be charged. And that is fundamentally where I think should stop happening. But what you are seeing emerge, we're trying to cultivate at Fundera, is full transparency of price, transparency of terms, transparency of options for the business owner. I think that fundamentally is what the Fundera marketplace, the Fundera platform is about. Making the loan process as simple and understandable for the borrower as possible. So if they come on to the site and fill out a 5 to 10 minute application, they now, very similar to kind of a kayak-like product, and understand all the options they qualify for. And they can sort those options based on, as you mentioned, maybe it's the lowest price or the lowest APR. Maybe it's the fastest time to funding. Maybe it's they don't want a loan that has to be securitized. Whatever their preference may be, and there's absolute truth to the fact that there is variance to that. And not all business owners' preferences are created equal per se, but the fundamental point is to empower them to make that choice. They should have the information to make that choice.
Right. No, that's great. And I think this industry desperately needs like a kayak type product, like where people can see it. I mean, the trouble with small business owners is that the vast majority of small business owners are not finance people. They, whether they're good at their whatever their particular business is, whether it's a restaurant, whether it's a plumbing business, what have you, the people that own these businesses are not finance people. And so, they can't, they need something that's simple, and it's not out there right now. And, so I can see how, there's a huge opportunity there for someone. And the fact is you really don't have any competition from a major, like if you asked to think of like a national small business broker, for example, there's no one, I don't know any, as far as brands go, there's no brand out there right now.
One thing I would just say, which Jared alluded to earlier, is to that fundamental point, which is that right now, a lot of business owners want to focus their time on running their business. I know from just my family's own small business, the small business owner is CEO, CFO, CMO, CTO. They run it all. And they really don't have the time or resources to spend vetting every single loan option, comparing all the different options they may have, even if they know those options may actually exist.
Right.
And so that's why lending literacy and being able to educate business owners on 3 fundamental steps in a loan process before you apply what you need to know in terms of options, while you're applying what you need to know, and specifically what you need to look out for. So predatory lending tactics, predatory shady brokers, things of that sort, what you need to know in order to be prepared for battle as you're going through that process. And the last piece is what you need to know if you didn't get funding, so that way you can get funding next time around, and so that way you can graduate to the lowest yielding rate possible. Right,
that's a very good point. Yeah, because that information is often not made available. So, Jared, I wanted just to, before we close, I wanted to get some idea about the competitive landscape. As I said, there's no national brand here. I mean, there certainly are competitors in this space, like Biz2Credit comes to mind, who seem to be doing a somewhat similar thing to you guys. How do you view the competitive landscape, and what's your take on where Fundera sits?
So we generally divide competition into one of 2 buckets, one of which is pure lead gen. So finding customers either online or offline, gathering a little bit of information about them, and then selling their information to whoever will purchase their information, whether that's brokers or lenders. And we ultimately think that that's not a great experience for the small business owner, because they end up getting bombarded with a bunch of cold calls from people that they never wanted to speak to in the first place. It's also not a great experience for the lenders, because it's ultimately a race to the bottom, and they're buying leads and trying to call a customer that doesn't really want to speak to them. And the second bucket are really people who are generally offline loan brokers. And when we think about what we are trying to do, it's not to displace all offline loan brokers and automate the work that all offline loan brokers do, because as Brayden alluded to before, there are many offline loan brokers who do have the best interests of the small business owner at heart. But it's really to eliminate the bad practices that these shady offline loan brokers engage in, and mitigate a lot of the price obfuscation that's taken place in the alternative lending industry, which somewhat of a negative sentiment to it to begin with, and also led to a lot of the high prices that we've seen. So when we think about competition, it's generally, lead generation or traditional offline loan brokering and price obfuscation. And where we sit is really having the best interest of the small business owner at heart, and ultimately trying to help them find the best product and the best terms for their small business, while providing them all the education that they need along the way so that they feel good about the decision they're making at the end of the day, and they've made that decision independently.
Right. Okay. And I see on your website there, you do have different options. Like you've got merchant cash advance options even, which obviously are at the higher end of the cost scale. Mm-hmm. I see you even have a bank, and I wanted to ask about that. You said you're focusing on non-bank lenders. I see on your about page, one of your certified lenders is Celtic Bank. So where are you at as far as kinds of products? Do you do SBA type products? Come to you?
That's precisely what you're seeing there.
Okay.
Are the SBA lenders that we work with as well. So we do SBA products.
Okay, so you do everything from an SBA loan, which is obviously going to be the lowest cost loan that a business can do, all the way up to like a merchant cash advance type product.
That's right.
And then you will, based on, obviously you get the data in and you say, you know what, you're not going to show them a merchant cash advance product or even an on-deck product if they can go to an SBA loan.
So our objective as an unbiased marketplace is not to push people to a specific product. It's to show them what they're actually eligible for, speak with them, understand their needs, and help them decide which product is right for them.
Okay.
So if somebody is qualified for an SBA product, chances are they will most likely try to proceed with an SBA product.
Right. Okay. But they might say, look, I really need this money in 2 days. And so then maybe someone like an on-deck, would come into play rather than a bank.
That's precisely right.
Right. Okay. I get you. So before I let you go, I want to ask one more question about, the investor side, because obviously, a lot of the listeners of this podcast are investors. What can investors learn from Fundera?
I think that's a great question. The market is incredibly fragmented, and right now we don't necessarily work with we don't work with institutional investors in terms of actually helping them find loans. But I think that one thing that we've seen is that on a pure product basis, there is massive fragmentation in the market, which leads to a lot of the confusion that small business owners experience when trying to identify the best loan product for his or her business. But I think from the investor side, that actually provides a lot of opportunity. Because there is no one standardized product for small business owners, or no one size fits all product for small business owners, I think it enables investors to actually diversify across many different product types. So the opportunity to actually invest in small business loans via different loan products is quite compelling. And I think that will continue to be the case over time as more and more direct lenders or transactional marketplaces or P2P lenders enter the market.
Mm-hmm. Okay, great. Well, I'm going to have to let you go now. We've reached our time, but I this has been fascinating. I could certainly talk for a lot longer about this. Small business is my passion, and I think you guys are doing great work. I certainly wish you all the best in building your business. Thanks a lot, guys.
Thank you so much, Peter.
Okay. So I think the real story here, the real opportunity, is something that was touched on in the middle of the interview, talking about the kayak, of small business lending, because kayak has done a great job in providing consumers with a comparison tool to easily shop for airline fares. Now, there is no such tool for the small business owner taking out a loan. They're really on their own. There's no one really there to hold their hand that can provide an independent and objective analysis of all the different options. So Fundera has the opportunity to fulfill that need. I think the need is great. I think we will see, if it's not Fundera, it'll be some other company that will become a dominant player, where it'll just become synonymous. When small businesses want to have a loan, they'll just think of this company within 5 or 10 years time, and it'll be very interesting to see if that company will actually be Fundera. I wouldn't count them out, that's for sure. Anyway, on that note, on our 25th show, I will sign off. I really appreciate you listening, sticking with us. And if you haven't done so yet, I would always appreciate an honest review on iTunes or Stitcher. That would be very much appreciated. Anyway, thanks for listening, and we'll catch you next time. Bye.